Welcome back. Module 3. What are equities or stocks? In the next 5 minutes, you'll get more IQ. Introducing to you, equities or stocks. Let's get down to basics. Madali lang to, promise. In this video, we will be answering Number 1. What are stocks? Number 2. What are the types of stocks? Number 3. Am I guaranteed high returns in investing in stocks? Number 4. What is HODL? Number 5. How are stocks valued? A stock represents ownership in a corporation's assets. When you buy a stock of a company, you are now called a stock or shareholder. See that? Pwede mo nang sabihin sa mga kaibigan mo na part owner ka ng isang kumpanya. Corporations that we can buy the stock of are listed on the local Philippine stock market. These are normally big companies with names you already know. We have the likes of Metrobank, PLDT, Jollibee, and so on. All these names form part of our Philippine Stock Exchange, or PSE. What are the type of stocks we can buy? These are two main kinds, a common stock and a preferred stock. The main differentiator investors look at would be on dividend payout. Common shareholders do not receive fixed dividends or sometimes none at all, while preferred shareholders receive fixed dividends. Stocks can also be classified as to what kind of advantage they can give to investors. Growth stocks are simply those that have high growth potential. For example, companies from emerging industries like tech. Value stocks, on the other hand, derive their value from more established firms like utilities. Historically, stocks have done better than bonds and cash in the long term. This is because you are investing in the growth potential of companies. And historically, stocks have beaten inflation and have provided excess return. You might think, "Oo nga, sa stocks na lang ako. Why invest in anything else if mataas ang kukuha ko sa pag-invest dun?" We have to understand, as the cliche goes, that with high returns comes high risk. So when we buy stocks, should we hold on for dear life or HODL? Given its higher level of risk, equities are ideal for long-term investment of at least 5 years. Earlier, we mentioned the Philippine Stock Exchange. Ano ba ito? This is where the stocks are listed. And investing in the PSEI or Philippine Stock Exchange Index is actually the easiest way to start, especially if you're undecided on which stock to buy. The PSEI basically tracks the performance of the top 30 stocks of the Philippines and is usually seen as an indicator of how well the Philippine economy is doing. But if you have the will and time to select stocks you want to buy, let me teach you how to identify undervalued stocks, which I mentioned earlier. That is by computing for that stock's price-to-earnings ratio. The PE ratio, or the price-to-earnings ratio, measures how well a company is doing relative to its price. Here's how you can compute for it in 3 easy steps. First, take the total earnings of the company and divide it by the number of shares in the market, and you'll get the earnings per share. Second, simply divide the price of the stock by the company's earnings per share, and you get the PE ratio. Third, compare it with its peers or the industry it belongs to. Theoretically, a lower PE ratio indicates the stock is undervalued, but remember to verify its fundamentals if it makes sense. Simple. Another way to identify if a stock is cheap is through technical analysis or by reading charts, which is a lot of work, but we can get there in due time. Just remember the basics. Buy low, sell high. To understand if equities are right for you, you need to ask yourself again your path. If your purpose is long-term growth for at least 5 years, and you are willing to take on bigger risks for bigger returns, then equities might be for you. Okay, gusto ko ng equities. So, paano ba to? To get started, Metrobank offers UITFs that are fit to your lifestyle and financial goals. Visit a Metrobank branch now to open a UITF account, or our website, or send us an email. #Tara! Invest!